What if I told you that right now, while you're watching this video, thousands of people are receiving paychecks without working a single hour? No, this isn't a scam. It's called dividend investing. But here's the million-dollar question everyone gets wrong. How much do you really need to make this your reality? By the end of this video, you'll know the exact numbers, the real strategy, and the 3 massive mistakes that keep 90% of people from ever achieving financial freedom through dividends. But first, if you want more content that cuts through the financial noise and gives you actionable strategies, smash that like button and subscribe so you never miss an upload. Quick disclaimer before we dive in. This video is for educational and entertainment purposes only. I am not a financial advisor, and this is not financial advice. Always do your own research and consult with a licensed professional before making any investment decisions. Let's start with the basics. Living off dividends means you've built a portfolio of dividend-paying stocks or funds that generate enough passive income to cover all your living expenses, your rent, your food, your car, your entertainment, everything, without touching your principal investment. Imagine waking up on the first of the month and seeing deposits hit your account, not from your boss, from companies like Coca-Cola, Microsoft, or Johnson & Johnson. They're literally paying you for being a shareholder. But here's where it gets interesting. Most people think you need to be a millionaire to make this work. The truth? It depends entirely on 3 critical factors that we're about to break down. Let's do the math that most financial gurus won't show you because it's too simple and doesn't sell courses. The formula is dead simple. Take your annual expenses, divide by your average dividend yield, and boom, that's how much you need invested. Let's say you need $3,000 per month to live comfortably. That's $36,000 per year. If you build a dividend portfolio averaging a 4% yield, here's what you need: $900,000. Yes, that's a lot. But stay with me because this number changes dramatically based on your choices. Now, what if you're willing to live more frugally? Say $2,000 per month or $24,000 per year. Same 4% yield, $600,000. You just cut your target by $300,000 simply by reducing expenses. But here's where it gets really interesting. What if you pursue higher dividend yields? Some REITs, preferred stocks, and dividend-focused funds yield 6 to 8%. Let's use 6% with that $36,000 annual need. Now you're back down to $600,000 for the original lifestyle. But beware, higher yields come with higher risks. We'll get to that. Now that you understand the basic math, let's talk about the 3 variables that determine your real number. This is the big one. Most people dramatically underestimate what they actually spend. You need to account for, pro tip, track every single expense for 3 months. The real number is always higher than you think. Add 20% to whatever you calculate as a safety margin. Here's the trap that catches beginners. You see a stock yielding 9% and think you've found the Holy Grail. But ask yourself, why is it yielding 9%? Usually it's because when that dividend gets slashed in half, your passive income just got cut in half. Your $3,000 monthly check is now $1,500. Can you survive that? The sweet spot for most dividend investors is 3 to 5% yield from established dividend aristocrat companies. These are companies that have raised their dividends for 25+ consecutive years. Think. They might not have the sexiest yields, but they're reliable. And reliability is everything when you're depending on this income to eat. Here's what almost nobody talks about: taxes will eat a chunk of your dividends. Qualified dividends are taxed at long-term capital gains rates, which is good news. Depending on your income bracket, that could be 0%, 15%, or 20%. But non-qualified dividends, taxed at your ordinary income rate, which could be much higher. Let's say you need $36,000 per year after taxes, and you're in the 15% qualified dividend tax bracket. You actually need $42,353 in dividend income. At 4% yield, that means you need $1,058,123, not $900,000. Taxes just added $158,000 to your requirement. Now let me save you years of pain by revealing the 3 mistakes that destroy dividend portfolios. We touched on this, but it bears repeating. That 10% dividend yield is a trap. Sustainable dividend investing is boring. If it's exciting, you're probably doing it wrong. Real example, remember when people were chasing high-yield oil and gas companies in 2014, 2015? Many yielded 8 to 12%. Then oil crashed. Dividends were slashed or eliminated. Investors lost 50 to 70% of their principal and their income. Double devastation. Putting all your dividend eggs in one sector is financial suicide. Imagine if your entire dividend portfolio was in. You need diversification across. Here's the sneaky one. You hit your number. You're generating $36,000 per year. You retire. And then, inflation slowly destroys your purchasing power. At just 3% annual inflation, your $36,000 in 20 years has the purchasing power of about $19,900 today. You're going backwards. This is why you don't just need dividends. You need dividend growth. Companies that consistently raise their dividends help you stay ahead of inflation. A stock yielding 3% that grows dividends by 7% per year will outpace a stock yielding 6% with no growth over time. The magic of compounding applies to dividends too. All right, you understand the numbers and the mistakes. Now let's talk about the real roadmap to get there. This is where most people are. You're working, earning income, and building your dividend portfolio. Your focus should be, at this stage, you might only be generating $8,000, $20,000 per year in dividends. That's not enough to live on, but it's building. This is where it gets exciting. Your portfolio is now large enough that the dividends themselves are meaningful. You might have $500,000, $800,000 invested, generating $20,000, $32,000 annually. You're close, really close. Your portfolio is $800,000, $1,000 plus. You're generating $30,000, $45,000 in annual dividends. Here's what you do. Before you quit your job, make sure you've made it. Your portfolio is generating reliable income, but you're not done managing it. You need to. Let's bring this home with real numbers for 3 different lifestyles, assuming a conservative 4% yield after taxes. Small apartment, modest car, careful spending, minimal travel. Saving $2,000 a month with 8% returns takes approximately 17 years to reach this. Nice apartment or small house, reliable car, regular dining out, annual vacation, comfortable living. Saving $3,000 a month with 8% returns takes approximately 20 years to reach this. Beautiful home, luxury car, frequent travel, premium lifestyle, giving back. Saving $5,000 a month with 8% returns takes approximately 22 years to reach this. Notice something. The timeline differences aren't as massive as the dollar differences. That's the power of compound growth. Starting early matters more than saving more. Don't want to wait 20+ years? Here are legitimate ways to accelerate your timeline. Live off dividends in lower cost of living areas. $2,500 a month goes much further in Portugal, Mexico, Thailand, or even low-cost U.S. cities than in San Francisco or New York. Living in Chiang Mai, Thailand versus Austin, Texas could cut your required portfolio from $1.2 million to $600,000. That's 10 years of savings right there. Who says it's all or nothing? Generate $30,000 from dividends and supplement with total $70,000 a year with only $750,000 invested at 4%. You've cut your requirement almost in half. Start with a smaller portfolio but focus exclusively on dividend growth stocks. A $600,000 portfolio yielding 3% today, $18,000, but growing dividends at 8% annually becomes, in 15 years, you're living off $57,000 annually without touching principal. Patience pays. Split your portfolio, 70% in safe, reliable dividend aristocrats, 3 to 4% yield, and 30% in higher-yielding REITs or preferred stocks, 6 to 8% yield. This gives you a blended yield of about 4.5 to 5% while maintaining reasonable safety. Small boost that compounds significantly over time. Before you get too excited, let me hit you with some hard truths that dividend influencers won't tell you because it doesn't sell courses. There's no shortcut, no hack, no secret strategy. Building $1 million dividend portfolio takes decades for most people. If you're not willing to be patient and consistent, this isn't for you. You won't have exciting stories at parties. While your friends are day trading crypto and talking about 10x gains, you're adding to your JNJ and PG positions. Boring wins. At some point, your $1,000 portfolio will drop to $700,000 in a matter of weeks. Your dividends might get cut by 15 to 20%. Can you stomach that without panic selling? Because if you can't, you'll destroy decades of work. The investors who live off dividends successfully are the ones who stayed invested through. They didn't sell. They stayed the course. Many even bought more. Even with a perfect portfolio, you should have. Living off dividends isn't set it and forget it. It's set it and monitor it quarterly for the rest of your life. All right, you've made it this far. You understand the math, the mistakes, and the realities. Here's your starting blueprint today. Sit down this week and calculate exactly what you spend monthly, every category. Multiply by 12, add 20% buffer. Divide by 0.035. Conservative 3.5% after-tax yield. That's your target portfolio size. If you're starting with less than $10,000, keep it simple. Set up automatic. If it's not automatic, life will get in the way, I guarantee it. Every 3 months, review. Celebrate milestones. So how much do you really need to live off dividends? For most people living in the United States, you need between $600,000 and $1,500,000 invested in a diversified dividend portfolio, depending on your lifestyle and location. Is it worth it? Absolutely. Imagine waking up every day and deciding how to spend your time based on what you want to do, not what you have to do. That's the dividend dream. Let's make this concrete. If you're 30 years old today and you start investing $1,000 per month in dividend growth stocks, averaging 8% annual returns, 5% growth, plus 3% starting yield, by age 55, you'll have approximately $1,000 invested, generating around $50,000 per year in dividends. 25 years of consistent investing. No lottery tickets. No get-rich-quick schemes. Just boring, consistent, reliable dividend investing. If this video helped you understand what it really takes to live off dividends, do me a favor and hit that like button right now. It tells YouTube to show this to more people who need realistic financial education. And if you're serious about building wealth through dividend investing, subscribe to this channel. I break down complex financial topics into actionable strategies you can actually use. Drop a comment below and tell me, what's your target number for living off dividends? Are you going for lean, comfortable, or abundant? Let's build a community of real dividend investors, not fantasy financial influencers. Remember, this journey starts with a single share. You don't need to be rich to start. You just need to start. Thanks for watching, and I'll see you in the next one. Now go calculate your real number and take action.